Well, thank you for that, Nima. And again, another very interesting week as many parts of the country, especially in the east, are reading from extraordinarily cold temperatures. In some cases, I think by the day's end, we'll probably be able to assess that these are the coldest days we've seen since 2016. We still have markets, trending down. And that energy markets, one would think we have extreme cold like this, natural gas prices would go up, propane prices in the futures markets would go up, diesel prices would go up, jet fuel, etc. But the world is truly upside down. Coinciding with this extraordinary cold weather that we're seeing in a place that happens to consume the most energy in the world. Yes, that's the New York region. So it's Boston, Washington, you can throw Toronto and Montreal in there. This area consumes more as a region than any place in the world. Yes, including China. You have nervousness in the markets in which energy players are not actually looking at energy fundamentals at all. They're not looking at this significant drawdown in terms of energy stockpiles. They're instead looking at good economic news coming from the United States. The non-farm payrolls this morning rose or at least dropped to levels not seen in over 40, 50 years. And that would otherwise be considered good, bullish news that would drive up energy prices. But of course, you have a market that is completely dysfunctional and players within it who frankly shouldn't be there. But that's just my opinion. Now saying, oh, well, this will cause the US Fed to raise interest rates, therefore demand destruction at some point down the road. Look, this is just kicking the can down even further. Oil's got to come back to $100 a barrel. Gasoline prices have to go up. Diesel prices have to go up to respond to demand. And as long as we continue to ignore those fundamentals, we're going to wind up with much higher, more disruptive, and more painful costs come April, May, and June, when, of course, demand does truly rise. I'll leave that aside for now, Nima, because I think it's important that people understand that maybe OPEC truly got it right a couple of months ago when they said that energy markets in North America are dysfunctional. They truly are, and I can't give a better illustration than what we're seeing this morning. Oil up $2 a barrel, then dropping by day's end. What we're seeing across Canada, though, is a reflection of perhaps more downward pressure on prices. Let's start with Ontario. We were 156 last week, now down to $1.44. That's likely to drop another 3 or 4 cents a liter back to $1.40. Quebec will see a similar decrease, probably bringing them back in Montreal down into the vicinity of roughly $1.55. For Western Canada, the Manitoba, Saskatchewan, Alberta, look for prices to drop an average of 4 to 5 cents a liter as well. So you'll be able to get gasoline in some stations well below $1.20, for instance, Calgary, where there is, as with the rest of the province, no provincial tax. British Columbia, slowly but surely, we are going to see in the interior prices drop about 5 cents a liter net. So perhaps down to the lower 150 range for places like Kelowna and Kamloops and Prince George. For Vancouver, we're going to see prices trend down to the low $70s. Ditto for Victoria. Now, on the East Coast, where we've seen some shocking numbers thanks to the regulated prices there, where bureaucrats are invited to invent numbers, especially in Newfoundland, where diesel continues to be almost $2.50 a liter, when even without tax, it's only $1.70 in Ontario. The difference is only about 10 cents a liter. Sooner or later, they're going to have to clue in, smarten up, and smell the coffee and get those prices back down. But until those in Atlantic Canada can get away from the security rug of a regulated system that doesn't serve them well, they're going to continue to pay through the nose at the hose. And that means, of course, in places like Halifax, Nova Scotia, New Brunswick, PEI, look for prices to drop off about maybe 3 to 4 cents a liter, with diesel hopefully coming down as much as 20 cents a liter if it were to respond to market forces. The bottom line, predictions happen everywhere. They happen every single day. We're doing it here. Many others are copying this, of course. But it's important for people to understand the days of the need for regulated prices have long since gone. The internet, transparency in terms of numbers, the availability of those numbers at anyone's fingertips within seconds on the New York, Chicago, or Pacific Northwest markets makes the ability to predict accurately the day and the day after prices much easier. You really don't need bureaucrats reinventing the wheel and trying to guess what the market is doing. So Nima, best to say for this week, it's going to be a great week for consumers. Sooner or later, markets will smarten up. And when they do, watch out. I think that's going to start in March. We'll take back to you, Nima. We'll talk next week.